like to get Roger's opinion on BHP. Considering the original resource rent tax that it was supposed to project in $24 billion from the original $12 billion, what's Roger's prediction on BHP in 2012 and 2011, considering Treasury predicted a higher rent tax? Thanks.
So yeah, look, there's you know, it's really, look, I think if you listen to what the independents say, the independent MPs, you know, I think the resource rent tax is pretty much dead and buried. But that's my take on it, and I listened to it pretty much full time.
Somebody did ask me to ask you who's going to win the election. Yeah. Sorry.
How do I know? I mean, you know, look, at the moment, I was listening to the radio on the way into to the station today, and my take on listening to the Libs and the Coalition is that they're not prepared to give over their budget costings, and you know, so we're in for a bit of a protracted argy-bargy. So we'll wait and see. But BHP. Trading at a discount to its intrinsic value. There's no doubt about that. I'm embarrassed to say what that intrinsic value is. It's substantially higher than the current price, but I think that's based on some fairly optimistic estimates for iron ore and coal prices, and I don't necessarily think that that's those sorts of gains are sustainable. I am concerned, as I said earlier, about China, so I'd rather bring down the estimate of intrinsic value. Having said that, it's still at a discount. So look, the same is true for Rio, the same is true for Fortescue. So all three of them there at discounts to intrinsic value at the moment, but you have to be confident that the China story is not going to have any road bumps. Valued potash at $117 a share US. The bid, I think, is around the $130 mark. There's rumours that the bid could go to $150. Here again, we've got the issue of, you know, we've got a demographic avalanche. We've got, you know, massive population growth globally, which could, I'm not saying this, which could put enormous pressure on food, which would drive food prices higher, and that would also drive the demand then for fertiliser. So the return on equity that potash has been generating, which has been around that 25–26% level for the last few years, you know, that could be a distant memory in a few years' time. You know, it could be double that, and maybe BHP's got some insights into that I don't have. It's
a call on populations, you're right, and also it's a diversification strategy within their own business.
But hasn't the fertiliser business been? It's really been quite volatile.
Well, of course it is. Yeah, it's a commodity-based business. Yeah, totally.
I guess to me, everything they're holding has been volatile lately.
Take some hold them all in. To me, it's a big bet by BHP. If they make, I mean, these big companies have made big mistakes before.
Big acquisitions.
Maybe they're a bit worried about Roger's call on iron ore and coal. They've got to diversify there.
When there's a lot of debt and there's a huge amount of goodwill in the acquisition price, then you get really, really worried.
Yep. Good evening, Jeff.
G'day, guys.
G'day.
I just got a query, couple of queries for Roger. I hope he can help me. On his calculations of the intrinsic value that are based on analyst forecasts going forward, I guess that's a bit of a guess. And in terms of that, are you able to use your guesses rather than the analysts? Is the first question. And if he's got time, intrinsic value of Ridgways.
In answer to the first question, the answer is yes. So I have a couple of valuations, not just one. One is based on analyst forecasts, and I have the capability of actually choosing which analyst's forecast I want to use. The other valuation that I have is one that is extrapolated from what I call a geometric mean of historical performance continuing. So I'm looking at, if you like, a through the cycle number for performance of the business. So I'm looking at not just one. And you're absolutely right. Analyst forecasts, typically optimistic at the start of the year, and there's plenty of studies that have been done to show that those analyst forecasts are actually pegged down more often than not as the year progresses. So on an average basis, mind you. So you're right, there tends to be optimism in the forecasts. I'm aware of that. That's why I have a range of valuations, not just one. You know, it's difficult for me in the time that we've got to talk about all the ranges, so you know, I usually just stick to one. And it's one that you can do yourself using the available information. I'm not going to go and give calculations here on how to extrapolate return on equities from historical results. So in terms of Wridgways, intrinsic value for it of $2.31. So $2.31, trading at, which is at a which is lower than the current share price. And in terms of quality, an A2 business as opposed to an A1, but not a C5, so it's up at the upper end.